Welcome back to this tutorial on financial modeling on Android using Kaluta Projection Methodology. In the first lesson, we ended up computing inflation index. Now we proceed with other assumptions on sales and cost of sales. As I said, this example is for smartphone sales. So we assume the quantity that we expect to be sold on April. As I said, January, February and March, this is year zero period where we don't expect any sales, and year one starts in April where we expect sales to start. So in April here, if the quantity of units, let's say we expect, I double tap here to open. So let's say we expect to sell 12 units in April. In May, sales are going to be 30 units. In June, say, are going to be 50 units. And from July onwards, say we expect 80 units. July onwards. Here is where we assume that we have arrived at a steady state. So I'm putting a formula here, equal sign, so that I pick this 80 figure and then enter so that I can autofill this. So I click here to open the menu and choose fill so that I can drag this to the rest of my projection period. Okay, so we are done with assumption for quantity. Price per unit, in this case it is 600,000 Tanzanian shillings per unit, and the price will be adjusted by inflation. So starting from May here, I'm putting a formula here. I start with the plus sign, and then click on 60 here to pick it and multiply by inflation rate, which is 1 in this case here. Here I pick it here. Okay, that is an inflation index. Then I enter. Now, in order to drag this formula, I need to make sure that the formula will be picking E10 cell anytime. So I have to put a dollar sign to the left of E10 in order to fix it. So I'm going to click on the formula here, use the back arrow, and then there I add a dollar sign and then enter. So this one I can now copy to the rest of using a fill. So I click again to open the menu and then click on fill, and then I drag this to the rest of the projection period, so that my figure will be adjusted by inflation rate. Okay, so you can see the figure is adjusted by inflation. Value. So the value will simply be the formula here, put a formula equal sign, will be equal to the quantity multiplied by price per unit. Enter. So that is the value we get, and I just copy this formula drag this to the rest by clicking on here, and then use the fill and then drag this. To the rest. So we have sales. Cost of sales assumption is 70% of sales. So we buy a smartphone at 70% of the price on which we are selling. So I click here, put equal sign, takes the value here, and then multiply by 70%. Enter. So that is the value I'm now getting, and I can simply tap this to take a fill so that I can drag this to the rest of the projection period. Let me format this into accounting. So from here I select this area, and then I click on this icon 1, 2, 3 here on top, and then I use comma separator, so you can see the figures are now separated by a comma, and then I go back again to remove the 0 at the end. So I click on 1, 2, 3 icon again, and then use this 0, 0 option with arrows to the right in order to reduce the 0. So I click twice here to remove the 0. So that's how I made my format. So now I have the value and cost of sales, the cost price per this, for the smartphones we are selling. Let us conclude our financials by only these two items first, and then we will proceed with other items in future, in forward lessons. So to make our life easier, I have added the sheets already for profit and loss, cash flow, and balance sheet. You can see them below. After workings, the first sheet I renamed it into workings, and the second is profit and loss, and then cash flow, and then balance sheet. To add a sheet, you simply click the plus sign to the bottom left corner here. Click here. You see the sheet has been added. So to rename or delete it, you simply click on the sheet. You'll get the options. Rename. So if you want to rename, in this case I'm deleting this because I don't need this. So delete sheet. Delete. Okay. So let us now go to fill these transactions into our financials. What you need to know is simply the basic accounting principle. Each transaction has a debit entry and a credit entry. So that's what we are going to use to input our transactions into our financial statements. So let's start with profit and loss. I click on the sheet here. I have already typed all the requirements so that to save time. So we start with sales. Okay. The sales figure is obtained in the working, so I'm just clicking on January 22 here. I'm clicking here. Let me double tap to simply open the type button, and then put equal sign, and after putting equal sign, go to click on working sheet, and then pick the sales figure for January 22. That means the value cell, which is here on B11. So as you can see, it says workings B11. There is where I picked my figure, and then press enter. So I have already put a sales figure for January 22. Cost of sales, the same. Put an equal sign, go to working sheets, and then pick on January 22 cost of sales figure, which is here on B14, and then click enter. So sales minus cost of sales, you get gross profit. So I put a formula here, click on sales, and then minus cost of sales, enter, you get the gross profit. And then after doing that, what I can do is simply select these, and then after selecting, use fill handle option in the menu here, and then drag this to the rest of the projection period. It's as simple as that. With this methodology, you can do monthly projection for whatever period of time you want to do, and then you summarize the financials on annual basis. We'll do that later, but for the moment we are concentrating on monthly projections. So we have let me see here what has happened, because I have this line here is not required, so I am deleting this because this one is not needed here. So clear. Okay, so I have my sales, cost of sales, and gross profit, and then there is administrative expenses. We will come to this later. I've just put the format for profit and loss statement. Administrative, marketing, and finance expenses. Now net profit before tax. Let's put the formula here on the net. Before that, let me freeze pen so that I can see the year and month columns as well as the descriptive columns whenever I move around. So I'm going to freeze pen, and in order to be able to see to see the year and the month rows and the descriptive column, I need to click on B3 here, okay, and then go to View on the top, and then click on Freeze Pens, okay, Freeze Pens here. So after freezing pens, now you can see I still see I'm not distracted now. Now I can go to the net profit. Here, net profit, I put the formula there, starting with equal sign, and then go to net profit will be equal to gross profit minus total administrative expenses, that will be here, minus total marketing expenses, that will be here, minus total finance costs, that will be here, enter. So that is my formula for net profit. And net profit before tax will just be equal to net profit minus tax figure here, which we assume to be 30%. This is the rate applicable in Tanzania for corporate tax. And then the last thing I need to put is cumulative net profit. So for the first month is simply the profit for January 2022 will be the cumulative, because we are starting. And next month the cumulative will be the previous month figure plus the current month profit, which will be here. So let me fill this first. This formula from here, net profit, and up to here. I use a fill handle and then drag this to the rest of projection periods. And then cumulative figure, I also click on it, click on fill from February here, because the formula for February will be the same for the rest of the month, that is previous month plus current profit before tax, to get cumulative figure. So I also drag this to the end. After doing that, I am done with my profit and loss statement. As you can see, sales are going to profit and loss statement and cost of sales. Now, in the cash flow, let's go to the cash flow. We assume that all sales are on cash basis. Okay, we'll do adjustments later, but to start with, we say all sales are on cash basis. So cash sales, I put a formula there. Go to P&L here, and then take the sales figure to be the cash sales. Okay, so I enter. So that is cash sales. Cash purchases. Also, remember we're in the January, so I click on the the equal sign, go to P&L, and then pick on cost of sales. So we assume all costs of sales right now are purchases that have been done. Okay, so I click on January 22 cost of sales figure as cash purchases. So assumption here is all we have purchased during the month, we have sold it out. Okay, now in the cash flow, the method we use here is any transaction that increases cash will be reported as a positive figure, and any transaction that reduces cash will be reported as a negative figure. So cash purchases is drawing out cash. So instead of taking it as a positive figure, I'm just coming back to this, go to beginning before the is equal to, and put a minus sign. Okay, so that purchases are reported negative in this cash flow statement because they draws out cash out of the business. So this is cash flow from operations. Let me insert a row here so that to explain this is a cash flow from operations section. And to do that, I'm going to home button on top here, and then when I'm at home button, I'm clicking on this icon here with red X to open the options, and then there is option for insert rows. So I click insert rows to insert row to the top, and then here I double tap here in order to write cash flow from operations. Cash flow from operations. And I will bold this. So I'm going to the A icon to the top left, to the top left options. I open it, and then there is B for bold. So cash flow from operations, and then we have total cash flow from operations. So I put a formula there, just put a plus, the sum icon. I click on the sum icon, you choose sum, and then it sums cash sales and purchases. So I use a tick here, check mark the green button to the top right corner. I click on it to accept. So total cash from operation. From investing and from financing, this will come later. So what I need now is net cash flow here, which is the function of, so I click on edit here to open the, so I put the equal sign. Net cash flow is a function of total cash flow from operations here plus total cash flow from investing activities, which is here, plus total cash flow from financing activities. So I enter to get my net cash flow, and cash flow at the end of the period is a function of, I put equal here. Instead of using equal, I can use sum. This is auto sum, so that I sum here. Oh, sorry. Sum, yeah, B19 to B20. There is where I want to sum. Okay, so I am done with my computations for January, and I can simply cash flow at the beginning of the period here we don't have because we've just started, so it's 0. So let me copy, just select all these. By selecting, you start from the first area where you want to select, click on that, and then drag the cycle to the place where you want to select. So I select up to here, cash flow at the end of the period, and then there is a pop-up menu. This is the local menu, and then I use fill. Here I choose fill in order to drag this formula and populate them throughout the planning horizon. Okay. So I already have my net cash flow. As I said, cash flow at the end of the period is, let's put some here, January. So let's put a summation here, sum. So we are summing those two, and we get the figure down there, and we drag this. So I click again to get a fill handle, and then I drag this to the rest. And there is one last thing, cash flow at the beginning of the period. So for January, we have just started, so there is no cash flow at the beginning of the period, is 0. For February, we put a formula here that cash flow at the end of January will be cash flow at the beginning of February. So I click here, I double tap actually to open there, put an equal sign, and pick cash flow at the end of the period figure for the previous month to be the cash flow at the beginning of the period for the next month. And this formula is going to be true throughout. So I click here, choose a fill, and then drag this to the rest of the projection period. So I am done with cash flow. Now let us go to the balance sheet. I have already arranged the balance sheet. I will do some adjustments here. Okay, here I see the figures for January, February, and March month are not seen. So let me, to make my life, to correct this, I can just select all of this here, and then after selecting all that, then go to in the X icon here, red X icon again, and then format cell size here. Click on format cell size, and then out of it column width. I can use this to correct that, so you see them all, out of it column width. So in the balance sheet, as we said, we had two transactions, one for sales and the other for cost of sales. For sales, we have debited cash because we have received cash, and we have credited sales. We have debited cash in the cash flow statement, and we have debited sales in the profit and loss statement. Okay? Now, the cash balance in the cash flow is taken to the balance sheet. Okay? So I click on January place to put a cash balance there, and then let me double tap to open then I put an equal sign, and then click on cash flow statement sheet, and then cash flow at the end of the period here in January. Here is where I pick my figure in January here at the beginning. Okay, and then I enter. So that is the cash for January. And maybe let me insert a sheet here. You can also click on the row header here, row header, and then in the options local menu for options there is insert. You can click on insert to insert a sheet, insert a row, instead of going to the long process we did. So here I've inserted to add a caption which is current assets, and I would like to to bold this, so I go to the A sign to the top left corner, open that menu, and then use bold current assets. At the moment we just have cash, so total current assets, we'll just put a formula for summation here. We will sum, so we sum there. We have total current assets, and then here let's body this also, fixed assets, and here we put a formula for total fixed assets, which will be from here down. Oh, sorry. Sum. What the sum fixed assets here. Oh, let me increase the size. Sum what's wrong? I can't sum it here. Yes. let me freeze the pens here so that I can see my freeze pen. View, freeze pen. So I have the total fixed asset formula, and then total current liabilities. I need also to have the formula there. Home sum total current liabilities will start here. Oh, I don't know what is the problem with my summation here, because anytime I try to well, let me simplify the matter here. Instead of using that sum, I see it is confusing me. For the moment, let us just, instead of putting, I put equal, and then it will be this way, this place, plus this. Oh, delete this. Total current liabilities equal to this plus this int. Okay, so total current liabilities. Total long-term liability, click here, put a equal sign, this one plus this one, enter. Owner's equity, that one will be total owner's equity equal to capital plus retained earnings, enter. Total liabilities and equity will be, okay, so here I need to have the row for total fixed assets, so I'm inserting the row here. Insert, maybe I should do it twice, so I need to insert again, insert, so that I have the total assets, which is a function of total current assets plus total fixed assets, enter. Total assets and total liabilities and equity here is a function of plus before that I also need to have total current liability, long-term liability, total long-term liabilities. I need to insert a row here, and then put total liabilities which is a function of total current liabilities plus total long-term liabilities. So that is total liabilities. Total liabilities and equity is a function of total liabilities plus total owner's equity. And the balance sheet check here will be a function of total assets minus total liabilities and equity. So that one will check to see if we have entered all the double entry transactions correctly, because the balance sheets need to balance. Total assets need to be equal to total liabilities and equity. If not, then there is an error somewhere. So let us go to fill our figures now. We have already put the formula for cash here in January to pick the cash from the cash flow statement, and from the profit and loss there is retained earnings. Here in the retained earnings we put an equal sign, go to P&L, and then pick the cumulative figure for January here as the retained earnings. So we have, thus far we have those two transactions to be captured in the balance sheet. Now what I need to do is simply dragging these formulas to the rest of the projection period. So I select these formulas up to here in check. In the check area I select up to here, and then use the fill handle, and then drag this to the end of the projection period. End of the projection period here. Okay, let me use out of it. So in this icon with the red X here, click on it, and then format cell size, out of it column width. So you can see my balance sheet has balanced because I have entered all the two transactions correctly in the profit and loss, cash flow, and balance sheet. Okay, so this is the end of lesson 2. From now we will now start to introduce other expenses and other approaches to financial modeling bit by bit, so that you are not getting lost into the big bush. You simply unfold one situation at a time. So that's why I said this is the easiest way of making financial modeling using my methodology, that is Kaluta Projection Methodology, which I have developed since 2010, when I started doing financial modeling or business plan preparation services through my sole proprietorship in the name of Businocrats Consulting Enterprise. So this is the end of this presentation for now. We will proceed later with other lessons. Bye for now.